Opendoor stock closed Tuesday's trading session in the red, finishing down by 57 cents at $8.92 per share, a decline of about 6%. The stock traded in a range from $9.80 at the high, all the way down to $8.82 at the low, before settling just under that $9 psychological level. On the surface, that may feel disappointing, especially after the excitement of last week's rally and the momentum we've been discussing. But what we're really seeing today is less about panic selling and more about investors sitting tight, waiting for Wednesday's all-important Federal Reserve decision. And that means there's still plenty of reason to remain optimistic about where this stock is heading. Now let's talk about what's been happening beyond the day's price action, because sometimes the headlines behind the scenes are much more important than the candles on the chart. A snippet was released today from the upcoming interview with Kaz Nejatian, the brand new CEO of Opendoor, which is scheduled to air in full on Thursday. Even in that short preview, we got a clear sense of how laser-focused Kaz is on executing the company's strategy and driving performance. One of the standout revelations is that he essentially walked away from a $300 million opportunity at Shopify to take on this role at Opendoor. Think about that for a moment. Most people would not even consider leaving that kind of opportunity behind unless they had conviction that the new path offered even greater upside. Kaz didn't just leave Shopify to take on a comfortable title. He gave up massive financial security because he believes that Opendoor can be bigger, more impactful, and ultimately more rewarding than staying put. That says a lot about his mindset, his risk tolerance, and his vision for the company. When you combine that with the fact that his compensation package is heavily performance-based, with large chunks tied directly to stock price milestones, you start to see the full picture. This isn't a CEO who's just here to collect a paycheck. His wealth, his reputation, his entire professional legacy is now linked to whether or not Opendoor succeeds. That's the kind of alignment long-term investors want to see. It tells us that he is highly incentivized to grow the company's value and to unlock shareholder returns along the way. Meanwhile, Eric Jackson continues to be the public face of the retail movement around Opendoor, and his comments this week were as strong as ever. He noted that he has been asked repeatedly whether he would consider cashing out after the recent rally. His answer was crystal clear. With the new leadership team now in place, he's more convinced than ever that Opendoor is on the right trajectory. Jackson reaffirmed his personal price target of $82 per share and beyond, saying that this transformation is exactly what he's been betting on. That kind of conviction, especially from someone who has built such a large following around the stock, helps to keep morale and momentum high among retail investors, even on down days like this. Adding another layer, Jackson also mentioned informal conversations with members of the Trump administration during his time in New York. We don't know the exact details of those talks yet, but the fact that there's a dialogue happening at that level shows the expanding influence of this movement. Remember, real estate is not just a business, it's a political issue, a cultural issue, and an economic driver. If Opendoor can position itself not just as a tech company, but as a platform that has the potential to improve housing access and mobility for everyday Americans, then it becomes a story much bigger than just quarterly earnings. That narrative is what can catch the attention of policymakers, influencers, and major institutions alike. Speaking of institutions, here's another important development. JP Morgan has maintained its buy rating on Opendoor in light of the recent leadership shakeup. That's significant. It signals that big banks are taking the new CEO and the return of the founders seriously. Institutional backing doesn't happen because of memes or hype. It happens when the fundamentals, the leadership, and the long-term growth potential align in a way that professionals can justify to their clients. The fact that JP Morgan is staying bullish reinforces that this isn't just a retail dream, it's a thesis that institutions are beginning to support as well. So, let's piece this all together. Yes, the stock dipped today. But that was likely a combination of profit-taking after last week's surge and some investors choosing to wait on the sidelines until they hear from the Fed tomorrow. At the same time, we have a new CEO who gave up a massive financial opportunity at Shopify because he sees Opendoor as a generational company. We have Eric Jackson doubling down on his conviction, pointing toward $82 and beyond as realistic price targets. We have JP Morgan maintaining a buy rating, which adds institutional credibility. And we have a leadership team that is more aligned with shareholder success than ever before. Another point worth noting is that today's decline came on relatively muted volume compared to some of last week's moves. That tells us that there wasn't a flood of selling pressure, more like a pause, a consolidation, a moment to catch breath before the next move. It's important to remember that stocks don't move in straight lines. Even the strongest long-term stories have days where the chart pulls back. That's part of the process. What matters is whether the underlying thesis is intact. And in this case, the thesis is arguably stronger today than it was even a week ago. Looking forward, Wednesday's Fed decision looms large. If the Fed signals that rate cuts are on the horizon, that's a massive tailwind for Opendoor. Lower rates make housing more affordable, more buyers enter the market, and transaction volumes go up, all of which directly benefit Opendoor's business model. Combine that with the company's efforts to use artificial intelligence and digital tools to streamline transactions, and you're looking at a potential growth engine that could fire on all cylinders in a favorable macro environment. But even if the Fed takes a cautious approach, the internal catalysts remain. We're going to hear more from Kaz on Thursday in his first major interview as CEO. That will give investors a clearer sense of his priorities, his strategy, and his tone as a leader. Based on what we've seen so far, expect him to focus on building a generational platform that goes far beyond just flipping houses. This is about redefining how people buy and sell homes in the digital age. And that's a vision that can resonate with retail investors, institutional investors, and policymakers alike. Let's also not forget the role of the short sellers in this story. The stock remains heavily shorted, which means that any burst of positive momentum has the potential to spark covering and accelerate gains. That's why days like today, where the stock dips but doesn't collapse, are so important. They test conviction on both sides. For longs, it's about holding through the noise. For shorts, it's about realizing that the risk of being on the wrong side of a transformational story is growing by the day. Now, I want to take a step back and highlight the bigger picture. This isn't just about what happens this week or next week. With founders like Eric Wu and Keith Rabois returning to the board, with Kaz Nejatian leaving a $300 million opportunity at Shopify to lead this company, and with institutional support starting to build, Opendoor is entering a new chapter. A chapter where the goal is not just survival, but reinvention and growth. That's the kind of story that creates long-term value. And if you believe, like I do, that real estate is ripe for disruption, then this is exactly the company to watch. In conclusion, while today's trading session might look like a setback, it's actually just part of the natural ebb and flow of a stock in transition. The fundamentals of the story haven't changed. In fact, they've only gotten stronger. We have leadership with conviction, investors with patience, and institutions beginning to validate the thesis. Tomorrow, all eyes will be on the Federation. Thursday, all ears will be on Kaz. And beyond that, the future of Opendoor looks brighter than ever. So, as we wrap up this Tuesday aftermarket update, my message is simple: don't let a red day distract you from the green horizon. Opendoor is not a one-day story. It's not a one-week story. It's a generational story. And right now, that story is just beginning to unfold.